Warren Buffett is unarguably one of the greatest investors of all time. He has been called the Oracle of Omaha, the Sage of Nebraska. I'm going to share 10 principles for investing that anyone can use to become rich. Number 1. Pay attention to the management team. Warren Buffett spends a lot of time learning about the management team of a company. When Warren goes for hunting for companies and businesses to buy, he looks at the management team first, whether they're talented and competent, and if so, he buys shares in the business. Buffett looks at a number of factors including share buybacks, dividends, dividend growth, and the overall company reputation. If you want to invest like Warren Buffett, get to know the management. Read the annual reports, earnings reports, watch interviews, and study the career path of the company management team. Number 2. Invest in what you know. Did you hear about Warren Buffett buying weed stocks? Warren Buffett is known for investing in simple businesses. He invests in what he understands. Weed stocks would fall short of a lot of Buffett's criteria, but the main point here is that he does not invest in something if he does not understand it. If you want to invest like the man himself, you shouldn't either. Number 3. Ignore day-to-day market movements. Warren Buffett once said investors should only buy stocks they would be comfortable holding if the stock market shut down for 10 years. There's no point in losing sleep over day-to-day swings in the stock market or headlines about trade wars, government shutdowns, or other short-term market catalysts. Buffett does not pay attention to the day-to-day movement of stock prices, Murray says. He is much more interested in the potential of the companies he owns to grow over long periods of time. Number 4. Be greedy when others are fearful. Benjamin Graham, a mentor of Warren Buffett, once said that the market is a pendulum, forever swinging between optimism and pessimism. Warren Buffett learned a lot from Benjamin Graham. For example, Buffett has said that you should be greedy when others are fearful and fearful when others are greedy. Optimism leads to greed and pessimism leads to fear. Buying from the pessimist means that you are buying stocks when there is fear in the market or buying low. Selling to optimists means that you are selling stocks when there is optimism or euphoria in the market or selling high. Number 5. Control your emotions. A big part of being a disciplined investor like Warren Buffett is being able to control your emotions. Buffett is able to make rational investment decisions in situations where other investors often let emotions cloud their judgment. Michael Batnick, director of research at Ritholtz Capital Management, says it's not necessarily Buffett's intelligence that has made him so successful. Emotions are a far more important driver of success than intelligence, Batnick says. What made Warren Buffett such a great investor was not just superior intellect. It was his emotional fortitude to stay true to his strategy during deep drawdowns. Number 6. Most news is noise, not news. Buffett believes most of the news headlines and conversations on TV are there to generate buzz and trigger people's emotions to do something. So among the most financial news, he attributed and consumed just only 1%. Number 7. Invest in companies with competitive advantages. Invest in companies that have strategic assets, pricing power, powerful brands, or any other competitive advantages because they have the ability to outperform in good and challenging times. A long-term investing strategy requires investing in companies, those able to operate in both good and bad economic times. Thank you for watching, guys, and I guess I'll see you on the next one.